we need to buckle up because markets are going to be way more volatile than you and I think. One day, Trump wants tariffs on Canada, Mexico, and China. The next day, he backs off. This isn't just political noise. This is a $1 trillion problem that could potentially wipe out our entire portfolio. We'll talk about that and more in today's video, so let's get started. Trump is flip-flopping on tariffs every single day. This uncertainty is killing the market confidence. One tweet and the stock market swings wildly. And not to forget a recent announcement on crypto reserve which saw crazy swings in the crypto market. And let's face it, even Americans are unhappy with his decisions.
Wall Street knows that Donald Trump is a pathological liar, which everyone knows. And Wall Street knows that Donald Trump doesn't understand anything about economics. Nothing.
These tariffs are a self-inflicted supply shock wound. Higher prices, less competitiveness because businesses are having to pay more for all their inputs, and because they have to pay higher prices, less purchasing power for consumers, which means fewer jobs down the road.
Shame on him for lying about my city, for having the nerve to insult our police commissioner who has overseen the safest Boston's been in anyone's lifetime. Bring him here under oath and let's ask him some questions.
Let's say he finally lets go of his obsession with tariffs. What then? He will find another obsession that will screw the consumer and the economy. So what do we do in the next 4 years? Should you buy a primary home? Should you start investing in the stock market? Should we even look at crypto? Or should we just sell everything? I am no expert, but here are things that I am doing to weather this craziness. My first plan of action is to double my emergency fund. I have a personal emergency fund of 6 months. I am doubling that to 12 months so that personally I am secure whatever happens to my business. Same if you are in a job and hold a 3-month emergency fund, I would recommend you to double it to 6 months purely because tariffs or anything that he comes up in the next 4 years might threaten our jobs and we need to make sure that we are secure till the time we can get another one. The second thing that I'll do is continue to dollar cost average the stock market. Now there is a lot of panic in the market. There are a lot of people who are selling off. There are a lot of people who are seeing a lot of reds, especially new investors who started investing, let's say in the last 6 months. They are seeing their portfolios in the negative and you might feel discouraged to sell everything, but I would not recommend doing that. Now this is not financial advice, but long term, and I'll show you a graph after this, long term stock market has returned through the troughs, through the craziness of Trump and the likes of him, through the wars. The market has always returned 8 to 12% long term. So I personally will not sell anything. However, I will change one small thing. I'll change my monthly frequency to weekly frequency, and the only reason why I'm doing that is because I want to dollar cost average even more in an environment where Trump says something and the market just crashes, or he pulls back the tariffs and the market just keeps going up. And in order to take advantage or not obsess over when to invest every single month, I am just moving my frequency of doing that. And I'm not saying that if I invest, so I made a video on this. I invest $5,000 every single month in the stock market. Instead of doing $5,000 every single month, I would be investing $1,200 every single week. So it's not like I'm investing the same $5,000, every single month. I'm just breaking it down into weekly investing, and that's how I'll be doing that. And yeah, purely because I want to dollar cost average through this variability. So the big question that a lot of investors have, especially if you are a new investor who has not invested a penny in the stock market, or you've been doing, sporadically, should I wait for the market to come down first? First of all, unless we want to wait 4 years, to start investing in the stock market, I would not recommend doing that. Secondly, if you look at the last 20 years of S&P 500, so this is the last 20 years of the stock market, and if, let's say, there are two people, one is person number one who started investing in Jan of 2007, not timing the market. He just said, okay, I'll just enter when I'm ready, and I will keep investing $1,000, and he does that for the next 20 years until 2025. And then there's a person number two who has a magic pill, right? So he's able to time the market at the perfect spot in Jan of 2009 when the subprime crisis was cooling off, and the market was starting to go up, and he timed the market perfectly when it dropped by 50%, so 1438 to 735, massive drop, right? You would think that person 2 is way ahead of person 1, in these 18 to 20 years, but that's actually not the case. If this person 1 invested $1,000 for the next 18 years, so 2007 all the way to 2025, so these are 18 years that you're looking at, they would have invested $216,000 in total. That's the principal that goes in, and today's worth would be $663,000. That's a year-on-year return of 11.5%, which is pretty healthy, I would say. If there was another person the person number 2, who also started investing at the bottom of the market $1,000 a month for 16 years, he would have invested less money because he has been doing it for 2 years less, so $192,000. And today's worth will be $552,000, and the year-on-year return will just be 0.7% higher. So yes, the return will be higher, but it's so marginal that it does not make any material difference if you look at long term. The key here is that both people were investing every single month through the highs and the lows. Now, if you look at these two numbers, in fact, person one was ahead. Yes, in terms of year-on-year growth, he might be behind, but he invested $24,000 more because he started investing 2 years early, that's 24 months, into $1,000. And his today's worth is over $100,000 more. So by investing an additional $24,000 or doing it 2 years early, he was able to get ahead by $100,000 versus person number two. And that's where, dollar cost averaging makes a lot more sense. And I don't think people should think of timing the market. As long as we believe that S&P 500 or the top 500 companies or the economy as a whole is going to grow through any Trump era that comes in the way, which has been proven from the subprime prices. We are nowhere close to that kind of a collapse. I think, if we do it every single month consistently, we'll come out ahead in the next couple of decades, even though it might feel that we will lose in the short run in 1 to 2 years. Said that, there's another thing. Trump is a massive fan of crypto. I don't understand crypto the way a lot of crypto maniacs, like enthusiasts, not maniacs, but enthusiasts, understand. But I am investing $300 a month. That's less than 5% of my overall investing budget that I have. So I'm not going crazy on crypto, not all in on crypto, 50% in TFS, nothing like that, right? So I'm not putting, any of my actual investments to risk. And if it goes down to zero, yes, I'll feel sad about it. But I'll be okay because, my other investments are into long-term asset classes. So I'm investing $300 per month, but instead of doing it monthly, because it's even more variable or even more volatile than the S&P 500, I'm actually doing it daily. So I'm doing $10 daily, $5 into Bitcoin, $5 into Ethereum. I don't do any other altcoins. I've never done that. I did that, back in 2017, and that's a story for another day. I lost all that money. Some people know that. But I do this, and I'll probably make another video on this. Now, this $10 a day might seem like a very, small amount to invest in crypto, but I'm doing it for the next 20, 30 years. Now, if you do the maths on this, let's say, I start with zero. I don't start with zero. I already have $15,000 worth of crypto, which I used to do, earlier. I have not done it in the last 12 months, but I started that in January with $300, $10 every day. The interest rate, let's say, when I say it's just the rate of return, let's say that rate of return is 10%. I'm just taking like 10% S&P 500 returns. You do it for 30 years, and let's say you are depositing $10 every single day. So let me see if I can do that. Yes, I can do that here, and I hit on calculate. I have done something wrong here. Okay, yes, this is yearly return, not daily return of 10%. Okay, I hit on calculate, and if you look at this, this will turn into $697,000. So around $700,000, and I only invested just over $100,000 on a 10% return. Now, if that's good sum of money, but with inflation in 30 years, it doesn't matter, right? But if this return is 15%, which is the hope, right? The reason why we are investing in crypto over S&P 500 is because we feel that it will grow faster than the S&P 500, or it will go to zero, and that's where I only invest, less than 5% into crypto. But let's assume that this actually grows for 30 years at a 15% yearly, year-on-year return, and we put the same $10 per month, and we hit on calculate, and I'm hoping that this chart has been acting funny. This will actually amount to not $700,000, but $2.1 million. And that's the reason why I do daily investing, because if you take a 15% return, you can actually land up on $2 million. And the reason why I don't go all in on that, because I really think that crypto can go down to zero, even though it's hard to believe now because it's been a while. But I don't want to go all in on one asset class, but it'll be nice to have $2 million at a 15% year-on-year return in 30 years. The fourth thing is prepayment towards my primary home. I was supposed to do $15,000 this year because I'm not investing a lot on other asset classes like real estate investment properties, not for the next 6 months. I thought that I can actually put a little bit towards my primary home, because my primary home, I would want to pay it off. I actually made a video. The last video was about that. I would want to pay it off as early as 13 years by the time I'm 50. So I am doubling the amount of prepayments that I do every year from $15,000 to $30,000. And I would encourage you to watch the video that I made on last Sunday. I have set aside funds to invest in my skills and in my business. Now, when I say business, it's not about employees and everything. That's ongoing working capital, but I'm talking about my skills and additional things that I'll do to my business, and that budget is about $50,000. Now, you don't have to have a massive budget like this. You can have $5,000, you can have $6,000, $2,000, whatever it is, you want to set aside to improve your skills, to improve your communication, to learn, how to freelance, to learn how to edit videos, to learn how to do social media, to learn how to grow a side hustle from $0 to $5,000 a month, whatever that is. I think every one of us should put aside some money towards our learning, purely because Trump can actually take away everything, but they cannot take away our skills. It can take away our jobs, but it cannot take away the ability to sell. And that's the reason why I'm a huge propagator of investing in skills, and I walk the talk by doing that. And the next thing that I am not doing is not investing into any investment properties, not in the US, not in Canada. I just want to see how these tariffs play out in the next, let's say, 4 to 5 months, see how it impacts the job market, because my favorite market to invest is Calgary, because there is cash flow in that market and there's a lot of potential in that market, but it's also a little bit more dependent on oil and natural gas, which will be a target for tariffs. And I want to see how the vacancy rates play out in the next 4 to 5, 6 months. And if Trump cancels all these tariffs, I'll again get back to searching for my next investment property, probably in Calgary. Now that's investment properties, but what about primary home? Should you buy a primary home right now? Should you upgrade to a bigger primary home right now? And I have been talking about this a lot, in bits and pieces in my one-to-one calls with people. But I feel that tariffs will reduce supply of homes further in Canada. And the reason for that is that this is an article from March 4th. Homebuyer Association of Canada came out with saying that US tariffs is set to slow pace of home building in Canada. And the reason is that, all these companies, all these, like raw materials that are used to build homes, like lumber, aluminium, all these things, if, US stops taking, Canadian lumber or Canadian aluminium, or there are, it gets more expensive and they decide to, US decides to buy it domestically from within US, these companies will reduce their revenue by less than, more than half. And with that, the profitability will reduce. So either they'll have to increase the prices of lumber and aluminium. I'm just taking these two examples because these are the main raw materials which are used in home building. Or they'll have to set up shop in the US. So they'll have to move from Canada to US in order to get rid of tariffs, which is not logistically, possible for everyone to do. So most of these companies could actually shut down shop. And that would be a huge dent into, it will just create a supply shortage of all these materials, and therefore the Home Buyers Association is saying that it'll be it'll slow down the pace of home building. That would actually worsen the problem in Canada. The housing shortage will, if we are any which way building half the homes that we are supposed to build, and the demand will not slow down because immigration is still happening, even though it's not at the same pace, but it's still happening. The population is still growing, and the demand and supply gap will increase, especially when we recover from this recession, which we will. Despite the tariffs, despite everything, however long it takes, long term, we will recover from this, and then this will actually come bite us. Now, talking about the readiness of people that are, calling us, I always tell anyone, and I'll put it here, that, I used to say that you should have at least 3 months of emergency funds, but now I would say that you should have at least 6 months of emergency funds. Now, I used to also say that your job should be secure, but with what's happening and this lunatic at the top in US, with all the policies that he's coming up, even, if your job is secure and he comes up with another policy that actually just, impacts your industry now, you just can't control that, right? So that's where I feel that just improving the emergency fund, and obviously EI will take care of a fraction of your salary anyways. I think that would weather any storm that you have if you are a homeowner. The third thing, if you are looking to buy your primary home, is buy within your budget. In fact, lower than your budget. No over leveraging, no use of line of credits. It's bizarre how many people use line of credits to do down payments on their primary home. And please do not do any income fraud. First of all, it's a crime. Second of all, you can get caught, and you can have a flag on your credit forever. And third of all, income fraud just puts income on paper. It doesn't put income in your bank account. That basically means that you would be over leveraged and you would not be able to pay off your mortgage, or you would not be able to pay your mortgage if things go bad in your industry and your job is lost. So make sure that you are buying within budget and no over leveraging. Please, it's a request. Not everyone, I cannot help everyone, with the mortgage and the guidance. But if you're watching this and you're getting a mortgage from someone else, I would recommend that you do not get or fall for all these stupid things, right? So buy a primary home only if you can hold for a minimum of 5 years. If you are thinking of upgrading in the next 2 years and you just want to buy as a stepping stone, don't do that, right? So we don't know what's going to happen in the next 1 to 2 years. The market can go up, the market can go down, tariffs can just fizzle out in the next 1 month or in the next 1 week. Anything can happen. There's an election happening in Canada. Maybe there's a policy that comes in that just increases the housing prices, or it reduces. We just do not know what would happen because of the political scenario that we have. Not to forget the war which is happening in other parts of the world. I would only buy a primary home if you can hold it for 5 years, and if that's not the case, do not buy. The worst time to sell, this is probably the worst time to sell. Even if you're an investor holding on to an investment property, it's the worst time to sell because the market is down. However, it's a good time to upgrade. even if you get, and the underlying thing is that you should have some equity in your home. But if you sell at a lower price right now, you would also buy at a lower price right now, which is exactly what I also did. I probably lost about $50,000 on the sale. So if I had, sold my home in a really good market, I would have gotten about $50,000-$60,000 more. But I was able to buy my primary home at $200,000 discount. And that's how you need to strategize and have a team that can actually help you guide through this. Always in this market, sell first and then buy. Don't do the other way around, because that can be trouble. Do not buy pre-construction, because the cost of building is becoming higher. You would not get a very good deal, even though it might sound like an amazing deal. Monthly payments and down payments, all these builders are really scared right now, and you would lose the opportunity to negotiate really hard on a house that you understand, house that you can see, feel, and you know exactly what you are going into. And I would hold on to that certainty rather than buying into pre-construction for my primary home right now. So only buy resale homes, at least for the next 1 year, or 18 months even. And yeah, if you're not ready to buy a resale home, don't buy. Market is not going anywhere. Buy when you can actually afford that, but do not buy any pre-construction is something that I feel strongly about in today's market. And if you are someone who is looking to buy their first home, I have a free masterclass for you. The link is in the bio. It's 1 hour of pure gold. It'll talk about the process. It'll talk about different incentives that you have. There are multiple resources that I will share with that masterclass. And it's an amazing way to learn everything about home buying and going into this process with your eyes open. To wrap this up, Trump will do Trump things. Markets will react, panic, and overcorrect. But if you are waiting for the perfect moment to buy a home or start your investing journey in the stock market, you might be waiting for another 4 years. That's not strategy. That's a gamble. Here's the truth. The stock market, real estate, and wealth building, these are bigger than one man, one election. We cannot win by timing the market. We win by riding the waves, staying consistent. So instead of getting paralyzed with the noise, go back to the basics. Dollar cost average, diversify, stay liquid, and invest in assets that hold long-term value. Because end of the day, presidents come and go, but wealth is built by those who keep showing up. That's all I have for today. मिलते हैं अगली वीडियो में. तब तक के लिए bye bye.